Hey everybody, Ben Nelson, the everyday real estate investor here. Hope you are having a fantastic day. Hope you are making progress towards your goals in 2023 here. I can't believe we're headed towards the end of the first quarter. So, just on that note, make sure you're paying attention to what your goals are and what you set out to do this year. Make sure you're checking in on those waypoints. Quarterly is a great time to do that. We're not quite there yet, but be keeping an eye on that. Be ready to do your quarterly review and everything so that you know if you're staying on track, and if you're not, what adjustments you need to make to be able to make your goals happen this year. So today I am going to jump in and I'm going to have a little fun. So this is a little bit on the fly. I did think it out a little bit, but there's all this talk of AI and all these new programs and everything, and I thought it would be fun to just jump in to one of them here and just jump into ChatGPT and just kind of see what the program has to say about investing in real estate. And I'll either agree with it or counter it, and we'll just kind of see what kind of thoughts, quote unquote thoughts, this AI produces on real estate. So I'm not going to spend a whole lot of time on an intro here, other than let's get into it and let's take a quick look and see what AI has to say about real estate investing. So my first thing, and I have kind of messed around with this a little bit, but I'm going to just type in here, um, you know, top 5 reasons to invest in real estate. Reasons to invest in real estate. Let's see what it says. So this will be interesting to see what it says and what kind of things it comes up with. So um, probably going to be pretty basic stuff, but let's break it down and see what it says. See how AI processes this stuff. So this is really interesting because from a content standpoint, um, I'm definitely not an AI expert or maybe up to date on some of the stuff as other people, but it is interesting. This is I typed this in, top 5 reasons to invest in real estate, and in about 15 seconds it gave me a pretty good bullet point response on why to invest in real estate. And gosh, from a content creation standpoint, this would again 10 seconds, 15 seconds, copy and paste. I got some answers here that I can throw out there. So opportunity there maybe, but would really be easy to just kind of have all the same information, right? If everybody uses this in that same way, it just kind of regurgitates the same thing. So just kind of some general thoughts there on this. I'm still trying to work out how this could actually be beneficial for some content creation stuff, things like that. But let's jump into the answers here. Okay, so number one reason, according to ChatGPT, potential for long-term appreciation. Real estate has the potential to appreciate in value over time. Keyword potential there, right? Which means that the property you invest in could be worth more in the future than it is today. This can be profitable investment strategy for those looking to build wealth over the long term. Okay, so we all know that, right? In the market today, we have seen over the last year or so that appreciation kind of pull back a little bit in certain markets. So appreciation is a great additional benefit. I always kind of say that, and a lot of other um, investors out there that I respect highly, um, appreciation isn't a reason to invest in real estate. So I'm already, you know, maybe countering what the program is telling me. I agree that appreciation is great, but to me it's an additional thing, right? So it has to make sense outside of the appreciation. Appreciation certainly can increase your returns if you add leverage in the fact that you are gaining that appreciation on your entire asset price, asset value, and so if you have 2 or 3% annual appreciation, but you only have 20% equity, you're actually making a much larger return, 10 to 15%, because your leverage, right? So that is a huge piece with leverage and appreciation. So appreciation is great, but it is also kind of the icing on the cake thing. And you can do a lot of things to give yourself a better chance for gaining that extra return with appreciation, right? You target emerging markets, make sure you're investing in asset classes, a niche. I always mess that word up, niche, right? And in markets that are going to be doing, maybe better in the future than some other markets, and making sure you're looking at the drivers and the reasons behind that. So you can put yourself in a position to have a better chance of appreciation, and better appreciation by investing in the right markets. So let's jump into the next one here. So steady cash flow. Rental income from real estate can provide a steady cash flow stream, which can help cover your mortgage payments, property taxes, and other expenses. In some cases, the rental income can even exceed the expenses, hopefully, and more than just some, but providing you with additional income. Absolutely, cash flow. And it didn't really say, uh, it kind of said it. So steady cash flow, that would obviously be, you could take that a number of ways, right? You have income coming in, whether that's actually cash flow above and beyond your expenses is a different story, but that's, one of the big draws for real estate is that, you can get that steady cash flow. You have income coming in that pays your expenses, and hopefully puts a little bit more than your expenses into your pocket. So you're controlling assets, um, and it doesn't really get into this, but I'll take it one step further. You're controlling assets with um, probably debt to buy it. And so you're controlling it with that debt, and then the income is helping to pay for that debt and those expenses that are controlling the property. So I would agree with that one. Whether the cash flow is actually producing an income, putting money in your pocket, could depend on your strategy, could depend on your market that you're investing in. All of those things, whether you're looking for that monthly cash flow to pay your living expenses, or whether it's just something that you are controlling that asset to hold it for the long term because you believe the market is going to do well. You might give up a little bit of short-term cash flow for that long-term appreciation, right? So tax benefits is number 3. Real estate investors can benefit from a variety of tax deductions, including deductions for mortgage, interest, property taxes, and depreciation. These deductions can help to reduce your overall tax bill and increase your return on investment. So again, you don't invest for tax returns, but it is or for tax benefits. It is a additional piece, especially because tax law can change, right? So you don't want the tax tail to wag the investment dog, or however that saying goes, right? You don't want that to be the reason that you invest, but it's an additional benefit for sure. There's a lot to that, and if you didn't listen to my was it last week, a couple weeks ago, I had my CPA on, and we talked about some of the tax benefits of real estate investing. So if you didn't listen to that one, go back and listen to that one, because you're definitely not going to get specific advice to your situation, because you need to talk to your advisors about that and your situation. But lots of good, like, high level tips, pieces of information, things to get you started in the right direction if you are thinking about investing in real estate, or if you haven't gone down the tax benefit road with your real estate investments yet. So absolutely, tax benefits is a huge plus for real estate. Yet, they've talked about making changes, and they definitely could make changes, and history says that they have made changes to the tax code in regards to real estate. However, I'm going to go out on a limb here, and I'm going to say it's really not. So we kind of vaguely touched on this in the episode about taxes with my CPA. There are multiple pieces to why the tax code exists. Part of it absolutely is to generate revenue and to pay for our very large national debt and to run our government and all of those things. But a big part also is to drive behavior. So if you have a tax incentive in place, then people are more likely to do those things. And so the government directs behavior, or attempts to direct behavior by tax benefits, tax credits, things like that. You just look at all the tax credits for solar panels and for electric vehicles and all those things. And those are in place to drive people to do more of that and buy more of those vehicles, things like that. And it works. So that said, the reason why I'm mentioning that, we are absolutely still in the midst of a housing crisis. Interest rates have thrown another hitch in that with affordability. But the bottom line is, and every market's a little different, obviously, but on a national level, we are very, very behind in housing units. And we really need more built, and we just have been behind for such a long time. I would be very, very surprised if they do any drastic changes in the tax code that has that would affect real estate negatively, because it's already pretty incentivized and we're falling behind. And granted, a lot of the tax code is not necessarily um, helping the people that are building inventory and holding inventory and selling it, building to sell. Not a lot of their tax law is around that. So anyway, all that to say, they want to incentivize housing. They want to have people building and investing and providing housing. So I would be very surprised if they do anything that's detrimental to that. So it'd be interesting to see. Maybe they'll even renew the bonus depreciation piece that's starting to phase out, but time will tell. So, okay. Number 4, according to ChatGPT, inflation hedge. Real estate is often considered to be an inflation hedge because the value of the property and rental income tends to rise along with inflation, because value is delineated in dollars, right? And so if there is inflation in the US dollar and it takes more dollars to buy the same thing, then generally speaking, assets go up and are adjusted accordingly, compared to, delineated in that currency, right? So this means that real estate investments can provide a level of protection against inflation and help to maintain purchasing power. So you have appreciation and you also have inflation. Both of those, they're different things. So keep that in mind. Inflation and appreciation are not the same thing, but they both can affect the value or trading price or whatever you want to call it, of real estate, because value is kind of maybe not the right term and a little relative, but yeah, both of them have an upward pressure um, on values, on pricing, and they're again both very different things. Number 5, and then I'm going to throw in a couple that I think it missed. Maybe it would have put it on there if I would have said 6 or 7. But number 5 is diversification. Real estate can be a valuable addition to an investment portfolio, providing diversification and reducing overall portfolio risk. Investing in real estate can also help to balance out risks allocated with other asset classes, such as stocks and bonds. So this is talking about diversification between, real estate and other things like stocks, right? So I would add to this that you can diversify within real estate. So you just look at office versus retail versus apartments versus single family homes versus land. There's lots of different types of real estate. There's asset classes. Real estate is not an asset class, and even within because there's so many different types of real estate. And even within those asset classes, you really can't, it's every piece of real estate is different, right? They like to say that real estate's a commodity, and there's the commoditization of real estate happening with all of these big hedge funds buying and just lots of changes happening in our economy and our system. But every street, every neighborhood, every city, everything is different. So I would say that there's aspects of real estate that maybe could lead towards commoditization, but it's it's not the same. It's not the same. Commodities are the same in almost all aspects, and real estate is all different. Not all, but a lot of it's different, right? You have just so many different factors. So again, I mean, diversification among among asset class, you can have some retail, you can have some single family homes, you can have some apartments, you can have some office, you can have, now maybe office isn't the right one right now, but the point is you can diversify within real estate if you're trying to use that as a risk, as a hedge against risk. You can also diversify among markets, right? You can buy a little bit in a Western or an appreciation market, buy a little bit in a cash flow market, buy a little bit in stable markets, buy a little bit in potentially emerging markets, and you're going to be able to spread that risk across multiple markets. You're going to be able to have some different levels of returns success just depending on how each market does, and so you're spreading that risk, you're spreading out opportunity, giving yourself a better chance to avoid a big loss and also potentially get a really big gain, right? So that's part of a diversification strategy. Now if you feel really good about a market and you want to put all of your eggs in one basket, right? People do that, and again, that's kind of risk tolerance and what your investment strategy is. Not everybody diversifies, but absolutely you can diversify within real estate, and there's a lot of ways to do that. Okay, a couple I'm going to add in here. Again, maybe if I would have said 6 or 7 or 8, these would have come up, but it brought up appreciation, it brought up cash flow. It didn't talk about leverage and the power of leverage and amortization, right? So you have potential for appreciation, you have steady cash flow. If you're using leverage, and it did allude to this, covering your mortgage payments, right? The other side of that, or I guess an additional detail to that, is that if you are using leverage, you now have that cash flow coming in, you have your tenant paying for those expenses, but you also have your loan getting paid off, right? So you're getting, over time, you're gaining equity from the amortization of that loan. Every month that a little bit is getting paid down, you're paying the interest, but you're also paying part of the principal. And so you're gaining more equity that way. So you're gaining equity from appreciation. You're using that cash flow to also gain equity in the form of your loan amortizing. So I think that's a big one. This is one, and I'll end on this one, but real estate being less liquid, in my opinion, is actually potentially a positive thing. Now, in a really bad market, in a really down market, this could be absolutely a negative. But the fact that you can't just click a button and sell real estate provides some sort of stability in the real estate market because, and the fact that, you got to live there. It's not like it's a paper asset that you just own, and, selling it's not going to affect where you live, right? Or where someone else lives. I mean, there's a lot to that, but the fact that you can't just go on your online account, click sell, and it's gone. That's how you get your runs on the banks that we've heard about lately. That's how you get your stock price crashes, things like that, because things start to dip, people get scared, they sell, and all of a sudden there's no demand and there's a huge supply and prices tank, right? We saw a little bit of pullback last year in some markets, 10 to 15%, maybe 20% in some really bad hit markets. Definitely not your 40 to 50% that you saw back in the financial crisis times, but and who knows how the next year or two is going to work out. I think we're going to level off, but time will tell. But yeah, again, being a little bit less liquid and not being able to sell on, emotion or just how you feel in the moment or some sort of panic move, right? It helps bring stability to the market and not being able to just do that so quickly. So there we go. I'm gonna play around this. I'm excited to kind of just dive into this, and this is new to me. Actually, my kids introduced. I've heard some things out there about this AI stuff and everything, but my older son is the one that actually introduced me to the tool. So it's kind of fun to just kind of play around. I was messing around with it earlier, just trying to, just see what else it could do, writing lyrics for songs, just kind of some fun stuff like that, and just kind of playing with the tool. So it's a lot of fun. But yeah, I think, I would agree with all of these potentials or all of these reasons for investing in real estate, that they're great reasons to invest. Long-term appreciation, steady cash flow, tax benefits, and inflation hedge, diversification. And then the couple that I threw out there, using leverage and the power of amortization, and a little bit of illiquidity being beneficial to stability. So I hope that was fun for you guys. A shorter episode here, but I just kind of wanted to play around with this tool and see kind of what it spit out, and if it was accurate according to at least my thoughts. And yeah, would love to hear your thoughts. I'm going to continue to mess around with this. Let me know if you agree with these top 5 and the couple that I threw out there. And we will catch you next time. I got a couple great guests coming up here. As I've had some awesome ones in the past. Hopefully you've caught those. If you haven't, go back and listen to the last couple episodes. Lots of great stuff with Blake, my CPA. A great conversation with my friend Seth Bacam, and lots of good tips there. So hopefully you're enjoying those, and we are going to have some great guests coming on here soon. So make sure you're paying attention to new episodes, and we'll catch you next time. Until then, go out, buy some amazing real estate, and make it a great rest of the day.